Hey everybody, welcome back to Ryan Makes Sense. Today we're looking at ticker symbol PRCH. That is Porch Group Incorporated. We're going to go ahead and see if the stock is worth $1.52. We're going to see if institutions and hedge funds are buying this. And we'll also look at some support and resistance on Think or Swim. Beautiful. Maganda. Bonita. Okay. So without further ado, we're all going to collectively shrink our heads and we're going to dive on in. So, if you know me, we like the bigger picture. This company went all the way to about $28 and as low as 50 cents, now trading at $1.52. Is this justified? We're going to find out. Looking at our strength, it's with the Bears, but um, that may change soon. The momentum also, it's kind of flat. You can see here, we've just been steadily declining over the past 5, 6 months. Money flow looks like it's hitching back up. We've got Fintel open, and that will show us the latest institution and hedge fund buying activity, so we can confirm that. And our relative momentum indicator looks like it was going down and has flatlined. So I would say this is pretty neutral. We did see the stock go again from about 70 cents to 474, now trading at 152. It is rather healthy for a company to pull back over 50% after it has had a run up. So we can see it looks like the company probably IPO'd, went up over 100%, and then fell 90 plus percent. So absolutely crazy activity there. But let's look at the bread and the butter here. So, positives quick ratio, that's fairly positive. Sales over the past 5 years, positive, resilient. Gross margins, 40%, that is fantastic. They are not profitable, not profitable. Fairly good shares outstanding here. That is good. Institutions own 50% of the stock as of now. That's great. EPS kind of looks like it is going up and to the right like this, which is good. We want to see this go from negative to positive. Sales up and to the right, exactly what we want to see. 2023, there was 430 million in sales. Trailing 12 months for 2024, we're at 470. So we're $40 million above where we were last year. And there's still 2 more quarters to report on. If history repeats itself, it often rhymes. 2024 should be better than 2023. Recommendation, Finviz really likes this stock. The highest recommendation it could give is a 1, so almost a 1. Again, gross margins 40%. Not an ugly balance sheet. Or I'm sorry, financial data points. Market cap is under 1 billion, so we're not going to look at that. Income is negative 85,920,000. Sales 470 million, 450,000. Cash. Let's go on down, baby. Okay. Really quickly before we do that, Q2 2023 they did 98 million. Q2 2024 this year they did 110 million. However, they spent $20 million more in advertising and marketing. Their gross profit actually fell 50% year over year. So that is quite wild. Um, is that going to continue? I don't know. It's a trend you're going to want to watch for sure. I mean, the other quarters, Q1 2024, 89 million in profit. I'm sorry, 26 million in profit. Q4 2023, 79 million. Q3 2023, 76 million. So this quarter right here really hit us bad. So going on down, gross margins. This last quarter was really bad. 8% gross margins, not good. 22, 69, 59, 17. So kind of all over the place. I don't think this company has really found their stride yet. Net income not good. Um, Not good. They're just gonna the profitability is likely gonna be increasing. I mean the yeah, it'll increase to probably like negative 95 million once Q3 data is released. Not good. I think they're still trying to find their stride. Let's continue to go down. They do have a lot of cash though. Is this USD? It is USD, baby. This could get interesting. Let's see what we got. 319,520,000. Okay, debt 436 million. Wrong one. 436,630,000. That's pretty crazy. Okay. Total assets 876 million. Total liabilities 978 million. When liabilities exceed assets, that is a red flag. Considering this company has 319 million, not too much of a red flag, but still, they need to get this in order. I'm glad they're not paying a dividend. They cannot pay a dividend. Um, Total debt is really just kind of hanging out at 43, 436. Total assets decreased about, they decreased 5 million. Total liabilities increased. That is not good. If your assets go up and your liability, I'm sorry, if your liabilities go up and your assets go down, they just have not found their stride yet, really. So that is not a recipe for success. They can't continue to move on and keep losing 5 million in assets while their liabilities continue to grow and the revenues kind of basically flatline. I mean, Q3 this year, they did 110 million compared to 98, but they also spent 20 million and gross profit was down 8.2 million, 8.23 million. So they have not found their stride. We'll continue on. That's just my opinion. My opinion. Where did you go? And then they have 97,060,000. So it's saying a fair share of the fair stock price per share, $2.76. We're at 152. So there is some slightly undervalued, but you have to keep in mind their liabilities are kind of jacked up. Their liabilities do exceed assets. Their negative income here is going to increase to probably around 90, 95 million. Um, and that's only based off of how it has grown from quarter to quarter looking at last year. So I don't think they've hit their stride yet. Um, Positives, I mean, positives are growing their sales, but at the cost, they're spending a lot more money and their gross profits are really just sinking, unfortunately. Um, Institutions own 53.66. That is old data. New data shows that they own 55.72. So that's about a 2.06% increase. You can see here it's starting to ramp up. Um, wow, this company decreased 50, almost 50%. This company decreased 10%. They, this person decreased 57. Matt Inrilichman added 4.8%. Morgan Stanley added, but they're looks like they've got a bag. Decrease. They sold out. Wow, they added, but I think they're still in the hole. Then we got some nice greens here. It's a lot. They added here. Oh, that's a big buy, baby. I mean, looks decent. Looks fairly decent, really. And then I just want to see what type of Development and operation of vertical software platform, software solution to home service companies such as home inspectors moving around. So the founder, very cool. He actually added he added about 1 million shares worth, which is good. That's pretty good. So he's got his skin in the game. That's something we like to see, honestly. Um, CFO, it's always like questionable when you see a CFO selling because it's like, what do they know? They they look at the books on a regular basis. So yeah, this company just has not hit their stride yet. Um, is it worth slowly adding? I think so, but be prepared for potential disappointment. Um, Not because the company's bad, it's just they have kind of a hill they've got to really climb out of. And let's just look here. Okay, so what I'm gonna do is a couple things. Let's look at some Fibonacci arcs. That's my favorite. It's like our all-time low is probably this candle here. Low 50 cents, low 54 cents. So perfect. Okay, see how this is a 10 out of 10 support test, falls through. 10 out of 10 test here of support. This is still a fantastic test of support, although it does extend beyond. Falls through, 10 out of 10 support right there. Tries to come up and test it, but it can't. So we've got time on this one, honestly. I want to see at least 2 or 3 more quarters where they kind of work their stuff out. Once we start to get into these rings over here, the company really can potentially move this way, or it could still remain flat-ish going this way. Uh, but my hope is they become more efficient. They're not there yet, and more and stronger. So let's draw some potential supports and resistances that we can track going forward. Ooh, baby, I love your way. Okay. So we're going to draw the gold channel, which means we essentially want the stock to get back to this level. We'll go here. Let's be conservative. To here, right there. So we want to see it stay. We got a nice resistance, beautiful supports here, double test resistance. Kind of a test here. We don't want it to go below this. We want it to stay in this channel. And then a more aggressive channel we want to potentially watch. Ooh. I mean, it's a potential. Let's extend to the right. So this will be our golden channel where we want to see the stock really come up to. So we'll make it gold. Why not? And we'll make it thick. So we want the stock to get back into this gold channel here. Um, so that all looks good. And the purpose of the Fibonacci arcs, these red lines that I drew, was to basically signify, okay, we've hit our all-time low here. If we had to project a potential all-time high, it's still really early to do that. I mean, I could go here, but it's really, we don't know. I mean, $7, maybe, but the company has a long way to go, in my opinion. So we have our temporary bottom here. If this stock does fall and it does go below 50 cents, I don't think it will. That would be quite a huge fall from here. But again, just we're going to need to give it some time here. So I'm going to be on the sidelines for this one. Again, we really want to see some efficiencies on the balance sheet and um, the getting better towards profitability. So that is my 2 cents on this stock. Let me go know what you guys think. If you made it this far, consider subscribing or engaging with the channel. It lets YouTube know that maybe I got something cool to show. And take care. I will see you soon.